There are no loopholes in the tax code. I hate that
Right.
word. It implies you're trying to get away with something. The only time you're really trying to get away with something is if you're using what we call creative accounting. And anytime you're using creative accounting, that's when you're trying to fudge things. And I'm not saying you won't get away with it. I'm just saying if you're doing that, you're taking on the risk for an audit and the risk of being caught of trying to characterize something that maybe you shouldn't. But that's the only time when you're trying to get away with something. Otherwise, it's not a loophole, it's a provision. And the tax code has lots of provisions for those that are aware of them. So, the third tax break is contributions to IRS qualified retirement plans, 401ks, and other plans like that. I can't think of any major tax breaks other than those. And what's interesting that during our working years, usually our taxes are much lower. But what happens over time, especially at retirement, the children are up and grown, but they're still going to ask you for money. So you don't get a deduction for that. The mortgage payments, assuming you have it refinanced, they're largely principal payments. So you're paying dollar for dollar mostly into paying the principal on the loan. So you only get the deduction on the interest. If you don't have interest being paid, you're not getting a deduction anymore for those payments, or at least it's very minimal. And then you're pulling money out of your IRS qualified retirement plans, not putting money in. And when you're pulling money out, it is fully taxable as income. They are salary deferral plans. That's literally what it says in IRS publication. I think it's 560. Salary deferral plan. So, if you're earning 100,000, you defer 20,000, you're going to be paying your taxes on 80. That 20,000 is deferred to sometime in the future. You're putting it in the plan to watch it grow. And then when you finally pull it back out, you're paying taxes as of the tax code design in that year, whatever it may be. That's the main ones. I can't think of anything else that's really that big. Medical
Yeah.
expenses above 7.5% of your AGI, adjusted gross income. I apologize for using the acronym. But I hope that no one has that issue, because that means you've got some big medical issues. And that's what insurance is for. And we hope that people are properly covered.